All right, so let's go ahead and complete the chapter 7 and 8 exercise, the first one, okay? So we are going to start on the month of May. Okay? So here, what we're going to do here is we're going to, says your inventory method is perpetual and it is moving average. Okay? So let's take a look at our first example here. We have on May 1st, we purchased 500 brown mugs at $2.65 each, with the freight costing $100 on an account from Cuppies Co. with terms of 5%, 15 net 30. All right. So first thing what I want you guys to do is I want you to get into the habit of when you recognize that something has happened, I want you the first thing to do is journalize it first. Okay? Because that's one of the common mistakes that a lot of students do is they dive right into the inventory worksheet and they move on and go straight to the next problem or go straight to the next day. No. Okay? As a bookkeeper, your job is to record, and that's how oftentimes you'll have discrepancies or you don't realize it, or you check back and you realize that I didn't even record this transaction. So, all right. So here we recognize that a transaction has happened. We purchased 500 brown mugs for $2.65 each, with the freight costing $100. Okay. Now in this case, yes, you can plug your numbers in so you don't have to calculate twice, right? But the great thing about Excel is you can calculate it in the cell as you go. Now, if you want to do that where you plug the numbers into the inventory worksheet and then journalize it, that is completely fine. Just for now, I'm going to teach you it this way. So when you do this on your own, you do however you feel is the best for you. Okay? So in this case, I'm going to journalize first. We bought brown mugs, okay? I have a chart of accounts, so make sure you look at that. So what am I going to be, how am I going to journalize this transaction?
You use purchase expense, cash, and freight expense.
In this case,
Oh
what?
no, wait. This is perpetual. Just inventory and cash.
Okay, so I bought this on an account,
Oh, on account. Oh, account payable.
accounts payable. Now, what's my inventory going to be?
Mugs.
Mugs for one. Okay, so 150 and accounts payable is 201. All right, so general journal. Okay, today is May 1st. Okay, we have mugs because exactly how Brian said it, right? We're using perpetual inventory. Everything you're going to be doing is you're going to place it into inventory. So there you go. And second thing we notice here is we placed it on an account. So accounts payable. Okay. Now, in this case, how much did I purchase in grand total for my total inventory? I purchased 500 units, right? 500 brown mugs at $2.65 plus a freight of $100. So how much is going to be my total amount that I owe, but total amount of inventory that I have?
For 25.
Go ahead, what was that?
I was gonna say the same thing.
Okay, perfect. So 500 times $2.65 should give you 13.25 plus the 100, right? 13.25 plus 100 gives you 14.25. Okay. Format this however you like. I think right now my current favorite one is using the accounting. Okay. just so then you could see the actual money, okay? So $14.25. Now, in this case, let's practice descriptions as well, okay? So here's your rule of thumb is, well, who did you buy from? Okay, in this case, who was my vendor? Cuppies Co. Okay, how much did I buy? Well, I bought 500 mugs, okay, at $2.65 each, okay? Did they give me terms? Yes,
Yeah.
they did. 5% if I pay within 15 days. If not, the whole thing is due in 30. Okay. So then, now that I have this, let's go ahead and plug it into my inventory worksheet. So again, today is May 1st. I bought 500 units at $2.65 each, with the freight costing $100. So in this case, what is going to be my total purchase price?
$13.25 plus 100 freight.
Plus $100 freight gives you a total cost of $14.25. Okay. Now in this case, right? Which costing method am I using?
Moving average.
Moving average. So right now, do I care to calculate the cost per item?
No.
No, but in this case, this is your only first batch of inventory. So what you're going to do is I'm going to go ahead and carry the number over. So I have 500 units, giving me a total cost of $14.25. So right now, I still need to calculate my average cost per item, because what if I sell something right now? What if I sold inventory? I would definitely need to know what my average cost per item is. So what is my average cost per item going to be?
$2.85.
$2.85. Now in this case, it is a nice even number. Okay? For now. Okay? So then let's go ahead and see what happened next. Okay? Now in this case, on May 5th, you end up returning 15 broken mugs for a full refund. Okay? You end up returning 15 broken mugs for a full refund. So let's take a look at my chart of accounts one more time. What accounts am I going to be using for this? How do I journalize that a return has happened?
By just using account payable and mugs.
Good, right? We take it once we put it into inventory, the only option we have is to take it directly out from inventory. So perfect. So in this case, it's May 5th. We know that since we didn't pay for the product yet, it's going to automatically deduct from what we owe. Okay? And because we're using perpetual inventory, right, it's taken out directly from my mugs. Now, in this case, how much am I going to take out from my mugs? I returned a total of 15 units, right? Because 15 of them were broken, right? So if 15 of the units were broken, at what price points can I actually return the product at?
$2.65.
$2.65. So let's do simple math here. So 15 times $2.65. How much is my total refund going to be for?
$39.75.
$39.75. So I'm going to make a note here that I returned, or I guess say, again, yeah, return 15 broken mugs at 2.65 cents each for full refund. Okay. So then let's go ahead and plug those numbers back into my inventory worksheet. Now, in this case, because we've never seen a returns or an allowance before, what's going to happen is you're going to enter it the same exact place as you were to do it in the purchases area, because in this case, right, we made a return. Now, yes, you could go ahead and skip forward and go dump it right into inventory on hand, but in this case, at least we know that this is what we're doing, right? We're returning 15 of them, right? In quantity, I'm going to put -15, and in the purchase price, it's going to be $2.65 each. And here, I'm going to go straight to my total cost because we can't return freight. So in this case, I'm going to put my total cost that I'm going to be subtracting $39.75 each, right? Because I just multiplied the quantity times the unit price. So now I have a deduction of $39.75. So what I'm going to do if I'm using moving average? What did that do to my quantity?
Lowered.
It lowered it, right? So how much did it lower it to?
Only by 15.
Yes. So in this
Or
case,
85.
we have 485 units left. Now in this case, we also got a refund. So that means I no longer have 1425. How much do I have now?
$293,814.
In this case it would be oh, you calculated this. Okay. Let me calculate that then. There you go. There you go. I did not get 298. In this case, it cost me $2.85 because my new total cost is now $13.85.25. Okay. So if you remember how we do this, right? Since I'm using cell referencing, I'm going to go ahead and just block this off. So then now I only have 485 units left at a total cost of $13.85.25 with an average cost per item of $2.85,619. Okay? Is everyone good so far? So this is what happens when we actually have to return our inventory products, right? And this, because we're using moving average, it's much easier, right? We can just take it out from any of them. In this case, I only have one batch of inventory, so it would be the same even if you had LIFO or FIFO. Okay? All right, everyone go with me so far?
Yes.
Okay.
Yeah.
So then let's go ahead and see what happened next. So in this case, I end up on the same day, I end up selling 10 mugs for $10 each for cash. Okay? Assume that sales tax is 8.25% because in your chart of accounts, in my chart of accounts, I have sales tax payable. So in this case, we are collecting sales tax. Okay, so how am I going to record this sale? I sold 10 mugs for cash.
With cash sales tax payable and cost of goods sold.
Okay, cost of goods sold is going to be the second part. So
Oh.
good. No, that's good. But that's not going to be together in that one same journal. So this is what you said. So you said May 5th, we're going to recognize that we received cash, right? We have sales and sales tax payable. Now, the second part of that journal is going to be what did you say? Cost of goods sold?
Yep, and mugs.
Good. And mugs. So in this case, right, because we're doing perpetual inventory, because we have to sell something, we have to take out things from inventory. So in this case, let me check my chart of accounts to see what numbers those are. So cash is 102, sales tax payable is 230, sales is 401, cost of goods sold is 501, and inventory is 150. Okay, let's see if I got that. Let me see. Cash 102, sales is 401, sales tax was 230, cost of goods sold is 501, and mugs is 150. Okay. So in this case, right, let's just focus on the sales first. In this case, if I sold 10 mugs, right, at $10 each, okay, for cash, how much was my total sales? $10 mugs at $10 each. How much is my total sales? 100. Okay. How much tax am I going to charge?
8.25.
Good. Which gives you a total amount of what?
108.25.
Okay. So $8.25 gives you a total cash of $125. Good. Now, in this case, right, you definitely need to go to your inventory worksheet in order to solve for the cost of goods sold. So, if I know I sold 10 mugs, okay, let's go to my inventory worksheet. I sold 10 mugs, all right, at what cost per item? What's my average cost right now for every item if I sell it?
2.85619.
Good, right? So in this case, I'm going to use my equal round because I want a rounded number at the end of the day. So how much was my total cost of goods sold?
$28.56.
Yes, $28.56. So in this case, I'm going to update my inventory because I no longer have 485 units left. How much do I have now?
475.
You have 475. Your total cost is also going to change too. Okay, I used to have 1385.25, and I sold $28.56 worth. So how much should I have left in my total cost?
$13.56.69.
Good, $13.56.69, bringing my new average cost per item to be. So what's this middle number here? What's this one? What's my new average cost per item?
$285.62.
Okay, so same
Oh,
thing, right?
yeah, 60. Yeah.
It did not change because you didn't sell like 100 of them. You only sold 10. So the cost per item is it's not going to change that much. Okay. Good. So I'm going to block that part off. So now I only have 475 units left available. So now I need to take this $28.56 because that is how much my cost of goods sold was for. It's for $28.56. Okay? And I'm going to make my note here that I sold 10 mugs. Okay? All right. So then let's go ahead and see what happened next. It is May 6th. You end up selling another 20 mugs for $10 each, but this time you sold it to customer A on an account. You gave this person terms of 10%, 10 net 30. So you sold 20 mugs to customer A. So how should I journalize this? Check out my chart of accounts.
Said it was sales tax and cash?
This was placed on an account.
Accounts receivable?
Accounts receivable. So 103, accounts receivable. So let's go ahead and make that. So on May 6th, we sold it on an account. So we should recognize that instead of getting cash, it's going to be accounts receivable. Okay. Right? You recognize that we had a sale and that we charged sales tax. Okay. Now, if I sold 20 mugs at $10 each, right? 20 mugs at $10 each, how much is going to be my total sales?
200.
200, right? 20 times 10, 200. How much tax am I going to be charging?
1650. $16.50. Oh yeah.
Sorry, I'm doing my formula here for 1650. So then how much does customer A owe us? 216 and 50 cents. Okay? I thought I dragged it all the way down here, but I guess I didn't. Oh, nope. There we go. Okay, so they owe us 216 and 50 cents. So here, I'm going to make a note here because in this case, right, I sold to customer A on an account. So I'm going to write sold 20 mugs to customer A because I gave customer A some terms, right? 10% if they pay within 10 days. If not, they owe me for the full amount in 30 days. Okay. So now that I recognize a sale, what else do I need to recognize?
Cost of goods sold in mugs.
Yes, right? Because we end up selling, we sold our inventory. So we need to update our inventory as well. Okay. So let's go to our inventory worksheet because I end up selling 20 items. So it's May 6th. So I sold 20 units at what average cost per item?
The same as above, right?
In this case, it's technically not the same as above. If you actually keep pulling it out further and further and further, it's going to be like a difference of like maybe 100,000th of a penny. But you can't be copying it from above. You have to be copying it from the average cost per item right here because this one's a little more accurate. Now, of course, you're not going to get a huge difference in a penny because the way that you sold it and when you calculate it, it's not that much of a difference. But just as a reference point, if you are cell referencing, I would recommend you to copy and paste or cell reference from the inventory on hand. Okay, but in this case, yes, it is the same as above. Okay. Now, in this case, I need to equal round this. So how much is my total cost of goods sold?
It was 216.
216? No.
Never mind, sorry. That was the other one.
Yeah, okay, so in this case, it's $57.12, right? Or if you took 58 times 2, you would have gotten the same exact answer as well, right? So there you go. I have $57.12 that I sold. So in this case, I sold 20 units. So what is my new quantity? Mm-hmm. What's my new total cost?
$12.99.57.
Okay, $12.99.57. Making my average cost per item to, once again, now it changed by a thousandth of a penny. So it increased by a thousandth of a penny, right? Even though we only sold 20 of them, right? Because we have a new total cost and a new quantity. That's what happens, right? It changes it by very, very tiny amount. Okay. So now I have to recognize that I sold $57.12. And I'm going to journalize that. Right here, $57.12. Okay. And I'm going to say that I sold this to customer A. So sold 20 mugs to customer A, right? Why is this so important? Because what if customer A decides to return stuff? Where are my fingers at? Customer A. Okay. Because in the other one, right, it was a general sale. We don't know who sold what, or we didn't know who we sold our units to. In this case, we do know specifically who. So we can pull up their records and be able to prove that, yes, they did purchase something from us. Okay. All right, so let's see what happened next. May 6th, so now we're on May 8th. We end up purchasing an additional 250 units of for $2.75 each, with a freight costing $50, and we placed it on an account once again from Cuppy's Co. with terms of 5% 15 net 30. So we end up making another purchase. Okay. 250 mugs at a total cost at a total $2.75 each, with a freight of $50. On an account from Cuppy's Co. So how are we going to journalize this?
Inventory and accounts payable.
Inventory, accounts payable, good. So in this case, exactly like from above here, right? We're going to place it right into my inventory, which is mugs. Okay. It is 5/8 now. All right, but this time we purchased 250 mugs at $2.75 each. Okay, but the terms are still the same, right? 5%, 15 at 30. So in this case, how much is my grand total for my mugs, and how much is my grand total that I owe?
It's $687.50 plus
That's how.
$50.
Plus $50. For the freight.
737.
$737.50 is what you owe in grand total. Okay. So let's plug our numbers into our inventory worksheet here, because I made a purchase of inventory. So it is May 8th. I purchased 250 units at $2.75 each with a freight of 50. So my purchase price, right, like we've mentioned before, is $687.50 plus 50 gives me $737.50. Okay? Because now we have new quantity, right? I no longer have 455 units left. I increased it, right, by 250. So how much is my new quantity?
705.
705 at a new total cost of
2037.
2037. Good, right?
7 cents, yes.
Okay. So then if I have this amount right here, what is going to be my new average cost per item? Because it will definitely increase.
288.94.6.
288.94.6. Good. Okay. It increased by 3 cents. Okay. So then let's see what happened next. Since I already calculated everything, right? I already journalized it. So we can go ahead and see what happened next. So that very same day, I end up returning 50 of the mugs because they were the wrong color. They sent us black mugs instead of the brown mugs. However, somehow the vendor convinced us to keep the mugs because they said, well, you can still sell those mugs anyway. There's nothing wrong with these mugs. They're just a different color. So in this case, Cuppies Co. offers us a 15% discount to reprimand their mistake, saying, I'm sorry, I sent you the wrong item. However, since I'm convinced you to keep it, I'll go ahead and give you a 15% discount. So if I'm getting a 15% discount and we accept it, how are we going to calculate this? Or in this case, how am I going to journalize it? Let's calculate it first and then we'll journalize it, okay? So if I returned 50 mugs, right, potentially, but I end up keeping it and they gave me a 15% discount off of it. Okay, so let's go to our inventory worksheet. Same day, right? But this time I'm not returning anything, right? How much is it going to cost me per item if I were to return it?
$275.
$2.75 per cup, okay? But in this case, I'm getting a discount off of it. So in this case, right, I'm returning 50 of those mugs, right, at $2.75 each. However, I am getting a 15% discount. So what is my total amount here? Actually, let me redo that formula. It's negative 50 at 275 times 15%. How much am I supposed to be getting back as my 15% discount?
137.50 cents.
No,
Why?
because I think this is what you did. You did 50 times the 275, right? I'm not returning the product. I'm keeping it,
Yes.
right? I can only get a 15% discount off of this amount right here. I'm not returning the entire product. They're not giving me a 15% discount on the entire thing because 200 of them were correct. So in this case, right, I can only discount the amount that I have a discrepancy with, right? The one that they sold the wrong inventory to me for. So in this case, that's returning the entire product and getting a full refund. Am I getting a full refund?
No.
No, I'm getting only a 15% discount.
Yes.
Okay, so in this case, negative 50 times the 2.75, okay, times 15, times 0.15, I get $20.63.
63.
Mm-hmm.
3. Yes.
Mm-hmm. So in this case, right, I no longer have 705. Actually, I do, but I'm just, I still have 705. But in this case, right, I definitely have a lower cost because now they're discounted. So in this case, it should lower my amount to $2,016.45. Okay. Now I need to recalculate my average cost per item because now I have a new total cost, but my quantity stayed the same. So that means I have this amount that I need to spread across evenly among 705 items. So in this case, what is my new average cost per item?
2.86019.
Okay, good. Now take a look at this. Because I end up returning or getting a discount, right? Now my average cost per item has dropped 2 cents.
More than 2 cents.
Okay. So now, right, I know what my total amount that I returned for, right? My refund is for $20.63. So let's go ahead and plug this into my journal. So I end up returning my mugs, right? Or in this case, getting a discount. I got an allowance. So in this case, what am I going to be taking it out from? Right now, everything's in my inventory, so I'm going to take it out from my inventory, just exactly how I did it in my inventory worksheet. It's still 5.8. All right, and this time it was for $20.63. Right, and my note here is I got an allowance for 50 black mugs. Okay, at $2.75 each for 15% discount. Okay. All right. So let's go ahead and see what has happened next. It is now May 10. So what happened on May 10?
Sold 30 for $10 each, $300.
Okay, so good for $300, right? 30 times 10 is $300. So let's plug that in here. We sold it for cash. Okay. Nope, I don't have enough space there. So I'm going to go on to my another worksheet here. General rule of thumb is you should definitely not space out your transactions. But in this case, I could have actually. No, I have to add an extra line in which in this case I don't want to do. So it's May 10, right? We sold 30 units at $10 each, giving us $300. What is the tax that I charged on this?
$8.25.
Okay, giving me a total amount of cash for sales tax. How much tax am I charging?
$24.75.
$24.75. So how much cash am I going to be receiving in grand total?
$324.75.
$324.75. Okay, good. So I'm gonna reformat this real quick. Now we need to calculate our cost of goods sold because in this case, right, with our new inventory average cost per item, it's definitely going to change. Okay, so let's see. It is May 10. We sold 30 units at what average cost per item? Right? So what is my total cost of goods sold here?
$85.
Good. $85. Mm-hmm.
0.81.
Good. All right. So I'm going to go ahead and update my inventory because I sold 30 units. So in this case, 705 minus 30 gives you 675. Good.
75.
All right, which gives you a total of 1930.64, which brings my average cost per item to be 2.8620.
OJ602.
Mm-hmm. All right. Going to block this off real quick. Okay. So then the number that I'm looking here is going to be the $85.81. That was my total cost of goods sold. So $85.81 was my total cost of goods sold. And I'm going to make a note here that I sold 30 mugs. Okay. So then May 12th rolls around. You end up selling 60 mugs at $10 each to customer B on an account. And you gave him terms of 10% net 30. Oh. So here we are, we're on May 12th, right? We sold 60 mugs to customer B, $10 each on an account, and gave terms of 10%, 10 net 30. So how do I journalize this?
Receivable debit,
Mm-hmm.
credit cash, and tax.
Good. Account receivable. Say that again. Credit what?
Sales and
Tax.
sales tax.
Good. Okay. So it's May 12th. Okay. And we sold 60 mugs to customer B. Okay. So, how much was my total sales going to be?
600.
600. How much tax did I charge?
$49.50.
$49.50, bringing my total amount that he owes me is going to be $649.50. Okay. Now in this case, I sold to customer B. So what else do I need to include?
Cost of goods sold and mugs.
Good. Cost of goods sold and mugs. Okay. Cost of goods sold and mugs. So let's go ahead and dive right into our inventory worksheet. So let me see, it is May 12th. I sold 60 mugs at what cost per item?
2.8607.
Good. So therefore, how much is my total cost of goods sold going to be?
171.
Okay, 171,
Yes. 61 cents.
61 cents. Okay, good. So then I need to take it out because I no longer have 675. I have a total of 615 left. Okay. 1930 64, and I sold 171.61. Okay. So how much should I have left in my total cost?
1759.
Good.
03.
Good. So then that brings my average cost per item to roughly about the same exact thing. Same price.
Yes.
Okay. If you actually expand it, it's different by 10,000 to 100,000 per penny. Okay. So there we have it. We sold a total of $171.61 worth of inventory. So therefore, the cost of goods sold, $171.61. Okay. And my note here is going to be sold 60 mugs to customer B. Okay. So let's see. 171.61 to customer B. Okay. So then May 15 rolls around, okay? Customer B decides to return 30 of those mugs for a full refund. Full refund for 30 of those mugs. So let's take a look at my chart of accounts to see if I have those exact accounts that I need. Okay, if customer B is making a refund, right? What accounts should I be looking at?
Receivable.
Accounts receivable, good. We have to give back the amount of money that that the customer originally paid us, right? In this case, they owe us money, so we need to reduce the money that they owe me.
Is it also sales returns?
Sales returns and allowances, good. And what else do you have to give back?
Sales tax?
You have to give back the sales tax, right? So in this case, that's exactly what we're going to do. So sales returns and allowances is account number 406. Okay. So, right, we talked about this. This is what, May 15. We are going to be having a sales returns and allowances. Account number 406. We're going to give back their sales tax money. And how did they pay? They paid with accounts receivable, so we need to reduce the amount of money they owe me because they haven't paid yet. Okay? Which is 103. So, how much are we going to be refunding customer B? In this case, right, they returned 30 mugs and they're getting a full refund.
300?
300, right? 30, right? We charged them $10 per mug, so they're going to be getting $300 back. how much tax are they going to be refunded for?
$24.75.
$24.75. Okay. So therefore, in grand total, they're going to reduce the amount that they owe by $324.75. And I'm also going to make a reference point that customer B returns 30 mugs for full refund. Okay. Now, in this case, customer B actually refunded and returned the product. So what does that tell us?
Effect on inventory.
It affects inventory because they actually gave us the product back. Now, in real life scenarios, you would technically put it in another inventory account. But this is general understanding, so you know this for sure. We're receiving back our inventory. So where are you going to put it? Back into inventory, okay? Okay, in real life, you'd put it under like a refurbished inventory pot instead of mixing it back into your new inventory items, right? You want to make sure you do that as a safe way to do business, right? But in this case, I know that what's going to happen is it's going to go directly back to my inventory, right? So therefore, I have to go put it back into inventory. Now, what would be my credit account? If this is going back to my inventory, how much am I going to, what account am I going to credit?
Cost of goods sold.
Yes, you're going to reverse the cost of goods sold because in this case, did you really sell the product? In this case, you have to undo it because it's a refund. It's a return. So therefore, you have to undo the cost of goods sold, which is account number 501. Okay? So in this case, I need to go back to my inventory worksheet to go ahead and undo it. Now in this case, right, because we sold it, we just recently sold it, right, then you can just go ahead and just take it off of there. Now let's say, what if this customer decides to give it back to us or, return the product, maybe 2 weeks from now? You would just take a look at your cost of goods sold, or in this case, your average cost per item. And what you're going to do is you're going to use whatever the current cost of goods sold item is. So unfortunately, you can't just go back into the past and undo it exactly how you see it. So if right now it costs you $2.8602, then that's what you're going to use. But let's say fast forward, maybe what if it's 284 5.9. Let's just say that was the price point. Unfortunately, you would just have to follow the logic so you don't go backtrack into messing up your inventory worksheet, because if you do that, right, then you're going to mess up your average cost per item very badly. So in this case, what we're going to do is we're just going to follow through. We sold the items, so now that we're returning the items, instead of having to look for the exact date that person purchased that and what cost it cost me, I'm just going to take my average cost per item right now, which right now it is, luckily, it is 2.8602. So in this case, we are okay here. So May 15, we end up returning 30 of them, so negative 30 in the cost of goods sold section because we have to undo the cost of goods sold, right? And right now, my average cost per item is the same. So in this case, how much am I actually going to reverse the cost of goods sold for? $85.81. Okay, so then I need to take that out from my inventory because, I'm going to add that back into my inventory, excuse me, because I end up refunding and putting the products back into my inventory. So in this case, I have 615, okay, minus my negative 50 or negative 30, excuse me. How much inventory do I have now left on hand?
585.
585. How did you get 585? We're adding 585.
Quantity minus 30.
Remember, we're adding the inventory back. It's because the way that I have it in my cell, if I add a negative number, it's going to subtract it. That's why I have to do minus a negative number.
Yes.
So in this case, I'm adding back my inventory, so I should have 645 items now. Okay, because I'm doing a refund, I'm putting the products back into my inventory. Okay. So in this case, how much money or how much is my new total cost going to be?
$1844.84.
1844.84, okay? So if you want to look at it that way too, you could just go like this and add a negative 50 to turn it to 645. So therefore, my average cost per item is now roughly, it changed by 10,000th of a penny, right? It increased. Okay. So that's how much we have to put back into the cost of goods sold and how much back we have to put in the inventory. So $85.81. Okay. 85.81. And once again, I'm going to go ahead and make a reference here that you had to return 30 mugs. Okay. Or I'm sorry, in this case, because there's a particular person, you can even throw in saying that customer B Okay. All right, so then let's see what happened next. That very same day, you also sold 25 mugs for $10 for cash. So in this case, what is going to be my journal here?
Cash, sales, and sales tax.
Good, right? Cash, sales, and sales tax. So I'm going to look for, here we go. So we're going to copy and I'm going to paste that here for the cash, sales, and sales tax. And it is same day, 15. Okay. So in this case, I sold how many mugs? I sold 25 mugs for $10 each for cash. So how much is my total sales? $250. Okay, how much tax did I charge on top of that? Or how much sales tax am I collecting? $20.63. So therefore, how much is my grand total cash I'm going to be receiving? Good. So therefore, now we sold stuff, right? We sold 25 mugs. So in this case, cost of goods sold, I need to go to my inventory worksheet. So now I sold 25 mugs at my average cost per item to be the $2.86021 because it changed by 10,000th of a penny. So then what is going to be my total cost of goods sold here?
71.
70. Yep, 71.51. Because you're going to have to round up for this one. So therefore, I should have a new total cost, or I'm sorry, a new quantity of
$620.
got you. And then the total cost is going to be, your $1773.33, which will bring your average cost per item back down by 10,000th of a penny. Okay. All right. So therefore, we sold a total of $71.51. So $71.51. Okay. All right. So then May 18 rolls around, okay, and customer A decides to pay in full with cash. Okay. Customer A decides to pay in full with cash. So let's take a look at when we sold to customer A. Let's see, we sold to customer A. Let's see. We sold to customer A on the 6th of May, okay? In this case, right, we gave customer A some terms. Did customer A meet the discount period? Okay, we sold to customer A on the 6th of May. We gave customer A terms of 10% if they paid me in 10 days. If not, they owe me in 30. In this case, they're making a payment to me on the 18th of May.
No.
No, right?
No,
The
yes.
16th of May would have been it. So they just missed it by a couple days. So in this case, right, whatever amount that customer A owes me, they're going to pay in full. So let's go ahead and look at our journal to see how much customer A actually owes me, okay? So here, accounts receivable. Where am I? Accounts receivable, May 6th, right, sold to customer A. They owe me a grand total of $216.50. So therefore, they're going to pay me $216.50 in cash. So how do I journalize this transaction? I'm going to be on the next page now.
Cash debit, receivable, credit.
Good, right? Cash debit, account receivable as a credit, right? Because we're going to reduce the amount that they owe me because we are receiving a payment. So 102 versus 103, okay? And they owe me $216.50. Okay? Okay, 216.50. And my note here is that customer A paid in full. Okay? Or you could say received payment from customer A, whatever makes sense to you. Okay? Now, in this case, does a payment from a customer affect anything that has to do with inventory?
No.
No, they're just simply paying for what they owe. Okay? So then let's see what happened next. The same day, right, you end up selling an additional 50 mugs at $10 each for cash. Okay? Same day, you sold 50 mugs for cash.
Cash debit, credit, sales and sales tax.
Good.
Cox max.
Cogs and mugs, okay? So there you go. It's the same day. It's still the 18th of May. I don't know what I put here. I don't know why there's 2020 here. Okay, this should be 5/18. Okay. All right, so let me see. Okay, so here, if we sold 50, did we sell 50, right? If on May 18 we sold 50 mugs at $10 each, what is my total sales?
$500.
500. How much tax are we going to be collecting?
41.25.
41.25. Good. Giving me a grand total cash.
500. 41.25.
I can't tell what that is. There you go. Good. Give us a total cash of 541.25 cents. Okay. So in this case, we sold 50 mugs, right? So now we need to calculate the cost of goods sold.
Let us go to the yes.
Yep, to the inventory worksheet. It is May 18, and we sold 50 mugs. Okay. So in this case, if I sold 50 mugs, at what cost?
286,020.
Okay, which gives you a grand total cost of goods sold to be, my Excel calculated already,
Yes.
to be $143.01. Okay, so let's go ahead and calculate this because we have to update our inventory, right? We just sold 50 units. So in this case, how much should I have left in my inventory? How many units should I have left in my inventory?
570.
570, okay, at a grand total cost of
1,630.32.
good, bringing my average cost per item to be the same, okay?
Oh,
Yep, the same.
no, I don't think so.
Okay, so let's go ahead and calculate it. 1630.32 divided by 570.
Yes.
It should roughly give you the same. If you have like a thousandth of a penny off, that's just this is what my Excel is just showing me. So that means I sold $143.01. $143.01. Okay. And I sold 50 mugs. Okay. So let's go ahead and do this last one here, where on May 20th, we end up purchasing 400 mugs at $2.80 each, with the freight costing you $80 on an account from Cuppies Co. with the terms of 5% 15 net 30. Okay, so in this case, I purchased 400 more mugs, okay, for $2.80 with a freight of $80. So I'm gonna go ahead and we could just do this. We could plug into the inventory worksheet and then plug it into our journal then. Okay, so it is May 20th. We purchased 400 units at $2.80 with a freight costing $80. So what is my purchase price?
$1,200.
$11.20. Okay. Plus my freight of 80 giving me a total cost of $1,200. Okay. So then now let's update my inventory, because now I just increased my inventory. So how much should I have now?
970.
$970 at a new total cost of
$2,832.
good. Which then my new average cost has now increased by 5 cents, right? It went from 2.86 to 2.91. Okay. And I'm going to cover that up. So in this case, I think my formatting needs to be reformatted. Okay, 2.91785. Okay, so in this case, right, my total purchases was $1,200. Okay, so I bought this on an account. So I'm trying to find accounts payable. Here we go. Mugs and accounts payable. Okay. It is May 20th. Mugs and accounts payable. And we know it's going to be for $1,200. Right? 280 gives you 1120 plus $80 of freight gave you a total of $1,200. Okay. Cuppies Co. 400 mugs at $2.80 with the with the terms of 5% 15 net 30. Okay. We've already updated our inventory on hand. Okay. So I'm gonna since it's only 9:49, let's just go ahead and do this one so we don't forget this one, and then we'll come back and do the rest, okay? So in this case, right, that very same day, even though I purchased inventory, I end up selling 30 mugs at $10 each for cash. So I end up selling my inventory, okay? So same thing here, I got cash and sales. And I also need to calculate my new cost of goods sold. Okay. on the same day, May 20th. So in this case, right, I end up selling 30 mugs for $10 each for cash. Okay. So therefore, how much is my total sales going to be?
$300.
300. How much tax am I going to be collecting?
24.75.
Okay. Bringing me my total cash to be $324.75. Okay. So in this case, right, I end up selling 30 mugs, right? So I got to go back to my inventory worksheet and I need to calculate it because now I'm looking at a new average cost per item, right? Because I sold 30 mugs, but this time, how much did it cost me per item? Right? $2.91 right now. So now we need to recalculate what my new cost of goods sold is going to be because this time I have a higher price point. So what is going to be my total cost of goods sold?
$87.53.
87.53 point something something something. So round up to 54. Okay. So if you look into your, inventory worksheet on hand, right, and you're looking at the cost of goods sold, notice this, right? How different the other previous 30 batches were. 85.81, now it's 87.54. Okay. Because the average cost per item has changed. So in this case, I sold 30 mugs. So my new quantity is
$9.40.
$9.40. Okay. My new cost of goods sold is, since I sold $87.54, is going to be
$2,742.78.
good. Bringing my new average cost per item to be roughly the same. Okay. Okay. So then now the number that we focused here is $87.54. So in this case, I sold $87.54 worth of mugs because that's what it cost me to purchase it in the first place. Okay. So there we have it. Let's go ahead and stop here. Okay. And we'll continue on with May 22nd and the rest of the scenario after the break. Okay. So